All right, it is time to take a look at your money here on Good Morning Quad Cities, but let's start with the weekly stock market recap. The S&P 500 down 0.2%, the NASDAQ down 0.6%, and the Dow Jones Industrial Average down 0.1%. And the new U.S. Department of Labor's Consumer Price Index reported that in January, the annual rate of inflation eased slightly from 6.5% to 6.4%. Despite the gradual decline, Wall Street was quick to react with an end-of-week sell-off. And joining us is our financial expert, Grywacheski. Good morning on a Monday on President's Day. Thanks for stopping in.
Another Monday holiday. We're both in here again.
Right? Well, let's start with this. So we saw that inflation eased, but yet we still saw the sell-off. Why?
Yeah. Well, last week I spoke to some former trading colleagues of mine on Wall Street, and their comments echo the broader commentary being made on this latest batch of inflation data. Remember, the goal for this inflation isn't for inflation just to simply decline, but to eventually return to that 2% target rate of inflation we eventually want to get back to, and ideally as quickly as possible. But we haven't had an inflation rate below 2% since February of 2021. And the longer this high inflation lasts, the longer it inflicts some level of pain on consumers and businesses and ultimately the U.S. economy. So, Control Booth, I think we have some inflation data here. Or
potentially.
Potentially. Maybe not.
Well, let's talk more about that 2%. When do you think that we could go back to that 2%? Because that felt really nice.
Here we go.
Oh, there it is.
Okay. Well, in my opinion, that this latest inflation data, reinforces the idea that inflation, that any return to that 2% target rate of inflation will be a very slow, gradual trip. Right. In other words, we should expect to have this high inflation or historically high inflation for most, if not all, of 2023. And some people, David, even argue even into the initial phases of 2024. So, if we have higher for longer inflation, that means that the Federal Reserve will be forced to keep interest rates higher for longer. And that very potent combination of high inflation, high interest rates will continue to act as a tremendous weight and strain on the economy when the economy is already expected to go into a recession. So very quickly before we go into that next one here, as we can see from the January data, the inflation rate came in at declined from 6.5 down to 6.4, but well above that 6.2% that Wall Street was looking for. In January, consumer prices rose by 0.5%, again, above the 0.4% that Wall Street was expected. And that core inflation rate, which strips out the more volatile and seasonal food and energy prices, again, 5.7% down to 5.6%, but once again, above that 5.5%. So inflation running much hotter than Wall Street was expecting.
So I guess the question I think we all probably want to know is, when will we start to see some improvement in some of those areas that we are paying a little bit more money for?
Yeah, one of the hallmarks of this 2-year inflationary cycle is that some of the biggest price increases we've seen over the last 2 years have been on everyday basic necessities. And I think that's yet another reason why Wall Street was pretty disappointed in this latest batch of numbers. If we look here, over the last 12 months, food prices have increased by 10.1%. Clothing, not too bad, David, at 3.1%. The cost of shelter up 7.9%. Energy prices up 8.7%. Now, in January alone, the 31 days in January, consumer prices rose by a hefty 0.5%. But more than half of that monthly increase came from the rising cost of shelter. Food, shelter, and energy. These three, David, accounted for 92% of the monthly increase in consumer prices last month in January. So unfortunately, basic necessities continue to be hit especially hard by this rising inflation.
Yikes. So we got a long way to go before we see a little bit more normal pricing?
Long way to go, but we're making progress.
Yes, we have to be a little
That's the important
optimistic. Yes,
thing about
proceed.
it. We're making progress, but still, that progress is coming a little bit slower than what Wall Street is hoping for.
Well, what we were hoping for too, and what our wallets are hoping for. Mark, thank you so much for joining us.
Good to see you again.
And here's a look at what's coming up on GMA.